Hey guys, welcome back to Trendy Gadget. Today, we'll give you a breakdown to what happened with the GameStop stock. Let's head into it. GameStop stock price explosion. The stock price of GameStop began its meteoric rise to history highs on January 12, blasting past its meager share price of $15 in mid-December to a peak of $467 per share. This value explosion made the traders a fortune, but it wasn't the sweets on Wall Street profiting in just 1 week from what was more than 700% share price boost. It was amateur traders who raked in millions. So what happened exactly to cause this unprecedented spike in the valuation of GameStop? It's a David versus Goliath story at its core, and it begins with GameStop's suffering business. The video game retailer was once a staple of strip malls, but the company has been battered by online game platforms such as Steam and the continuing coronavirus pandemic. By the end of March 2021, GameStop was forecast to close 1,000 stores, which was a response to losses over the last 2 years. Earlier in 2020, the company even employed Nintendo of America president Reggie Fils-Aimé and struck a profit-sharing agreement to mount a comeback with Microsoft. Still, for the retailer, the future looked bleak, and hedge funds noticed the potential to make profits from its fall. Investment firms like Melvin Capital are getting big on the share price of GameStop, banking on a short-selling trading strategy. For example, it's a fairly simple maneuver involving hedge funds borrowing GameStop shares from lenders at a $1 fee and promising to give them all back. If executed seamlessly, shorter stocks can offer huge profits, but if the short stock surges, it can be extremely risky. Hedge funds were so confident in GameStop's case that their stock would plunge that they compounded their shorts over months and made billions. This proved to be such a goldmine that big-time investors became overzealous and borrowed more stocks essentially than they could ever buy back.
Why? Well, shares nearly doubled today. They've soared 275% in a week.
The big squeeze. The Wallstreetbets Reddit forum is currently strong with 5 million members at the time of this video, up from 1.8 million on January 18. According to the Wayback Machine Internet Archive, once only for its toxic jargon, the community was known and its members bragged about enormous gains or massive losses on risky trades. Now, it has become the community that has cost hedge funds billions, all because it caught wind of the astronomical amount of money being poured into GameStop to bury. Short interest in particular companies is publicly available, and users of Wallstreetbets understood that hedge funds would be forced to buy back the stocks they eventually borrowed and sold, so they decided to purchase as many shares as possible to increase the share price, leading to the skyrocketing valuation of GameStop. Short sellers were also forced to buy the stock when the stock began its monumental climb to avoid even greater losses, which only caused the stock price to spike higher. That led to a phenomenon known as a short squeeze on the market. The German car company Volkswagen experienced a similar situation in 2008 and 2009, which briefly made it the most valuable company in the world. It has cost hedge funds such as Melvin Capital billions to date. On January 25, the company received a $2.75 billion bailout after losing over $3 billion on its GameStop shorts. The Wall Street Journal reported Wallstreetbet users were bragging about millions in gains all the while, but the stock market fiasco was far from over. On their bets, short sellers doubled, banking that the stock price would crash soon. They also appeared on financial news networks arguing that market manipulation was what had happened, but all the attention backfired.
Hedge fund that had shorted this company, Melvin Capital, is now out of the stock. They got out of the stock.
The fallout. Following this extraordinary moment for small-time traders, politicians like New York Congresswoman Alexandria Ocasio-Cortez tweeted, "It's really something to see Wall Streeters being bested by a message board." Barstool Sports' David Portnoy egged traders on even more by tweeting he predicted trading would be intergalactic. But all of this excitement came screeching to a halt on January 28 when popular brokerages Robinhood and TD Ameritrade issued trade restrictions on GameStop. Traders were no longer able to buy shares, but only to sell the ones they had, causing the stock of GameStop to fall from $467 to as low as $126. To justify its unprecedented restrictions, Robinhood cited ongoing volatility. The stock price movement even prompted the Biden administration to state that it was monitoring the situation.
David, we do have now some statements from Robinhood and Interactive Brokers about restricting trading on some names.
The move tied the hands of the majority of traders in Robinhood. According to Motherboard, more than half of the users of the app had at least one share of GameStop. Once again, this caught the attention of celebrities and politicians who lambasted their brokerages in order to keep smaller investors out, while hedge funds still had stock-free reign. The stock is no longer about money, but about sending a message to many small-time traders who own the stock. Members of Wallstreetbets and many others who jumped on board did this to be part of one of the most stunning US stock market democratizations in history. Some traders have expressed their desire to never sell their positions, to keep them as a reminder of the moment when amateur traders are squeezing billions of hedge funds. What do you think about the GameStop price development? Do you believe the stock price will go up even higher? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.